Welcome to the Treasury Update podcast presented by Strategic Treasurer, your source for interesting Treasury news, analysis, and insights in your car, at the gym, or wherever you decide to tune in. On this episode of the 2022 Outlook series, host Craig Jeffery sits down with Todd Yoder, Global Director of Treasury at Fluor Corporation, for an in-depth conversation on technology. They take a look back at 2021 Treasury trends and fast forward to 2022 to discuss mergers and acquisitions, market trends, technology and security, staffing shifts, and more. Listen in to this dynamic discussion to learn valuable insights for the year ahead.
Welcome to the Treasury Update podcast, Todd.
Good morning, Craig. It's great to be here.
Before we get into today's discussion and series, maybe you could give everyone a quick background on your career and your role at Fluor.
Yeah, so I've been at Fluor for 10 years, over 10 years, was hired into the Treasury group to work in capital markets and strategic finance for the Treasury organization. Also to set up a derivatives and hedging strategy department discipline for the company. And so that was back in 2011 and focusing on FX risk, interest rate risks, and commodity price risk. And so I've spent quite a bit of time on that. In addition to, I serve on a few different finance committees for some of Fluor's mega projects in the billions, and then for some of our joint ventures that we have globally around the world. And then also serve as innovation technology catalyst for the world headquarters. We're based here in beautiful Dallas, Texas. Also serve on DE&I in our supply chain and work on a council for the company to make improvements there. Exciting times that we're living in, and definitely exciting times at Fluor as well.
Glad you're keeping busy. As we start to look forward, maybe we could actually begin by looking back at 2021. We had a conversation, episode 135, about this topic, this look ahead. We talked about APIs, open treasury, data aggregation, analytics, visualization, open source program. We talked about a lot of things technical. Maybe you could highlight some of the summary points or summary items from that discussion before we look ahead to 2022.
I remember I had to laugh when I came across the lack of knowledge is paradise, and that was related to the lack of knowledge is paradise, but it's also very dangerous. And so we talked last year, we went pretty in depth into the dangers of not knowing what your risk is, the quantification, so the identification, I guess, first, of the risk you have related to foreign currencies, interest rates, and commodities. And then we took an even deeper dive into the components of FX risk, so cash flow, transactional based versus balance sheet and translation and consolidation, and how that all rolls up. I would highly recommend that podcast if some of your listeners are interested in those topics. The other one was APIs. So, and I think 2021 has been a strong year for continued growth in APIs. It's definitely been an enabler to get us closer to real-time treasury and solving a lot of the interoperability challenges that we have as treasurers. So APIs have been good. Our RPA has also been a tool in the toolbox for those. But as part of the great acceleration that we've talked about in the past on some of our other podcasts we've done together. So the four components driving the great acceleration. So storage and compute power, and then data and metadata, and then all the new innovative applications, kind of the four key drivers. And I think 2021 brought a lot of progress in all four of those categories, which is, I think, continuing to make the great acceleration that much more exponential. And then we talked a little bit about the project I was working on for Fluor, the Treasury team. When I say it was definitely a very collaborative team effort from Fluor's Treasury group. And Fluor has an amazing IT group and developers. And so it was a lot of fun to work with them on a project, a Treasury data warehouse. And so building that out and adding a lot of automation and data aggregation. So internal data and external data, and then building out the analytics, and then wrapping that up with the data visualization. So a lot of dashboarding. And we spoke about Power BI and how effective that tool's been for us in those efforts. And how that just allowed us to take instead of the typical bottom-up approach, to take a top-down approach to Treasury and data and what the machines are doing and what the humans are doing. The humans, when it's bottom-up, right, in the old days, before we had a lot of the technologies that we do now, it was a lot of pulling data from internal sources, different systems, and external from different outlets, and then pulling that data together manually, and then starting to build up. And the goal was to summarize that data into easy to read, understand, and actionable reporting. But with the technology and the automation and this project that we worked on, it allowed us to do the top-down. So the machines, the technology, doing the aggregation, the assimilation of the data, both internal and external, and then the compute, letting the machines do the compute and the analytics piece to look for outliers and trends, and then put that into reporting to highlight the key points of interest. So then as the human, you can come in, instead of spending all that time bottoms up and you're exhausted by the time you get to the summary data, you can come in and run the machines.
If you get to the summary data.
Yeah, yeah, before you burn out. Or lose version control, or all the things that can happen, right? But the top down allows machines to do a lot of that work, and then the human can come in and see the points of interest right away and highlighted, and spend more time analyzing and looking into the anomalies and the trends, and do they make sense, or do we think there are any fat fingers along the way that may have caused certain things, seasonality in the business, or a change in a business division. And so those are the notes I took when I look back at our kickoff podcast last year.
Yeah, you've been busy for the last couple of years. That story that you were just telling, our account of gathering the data, normalizing it, analyzing it, and making it more actionable is what many companies are going through. And so thanks for that update. As we look out to the rest of 2022, there's a couple areas I wanted to talk about. I want to talk about the M&A market, tech and security. Also want to talk about staffing and staff. But let's begin with the M&A market for the treasurer. You have a project underway. Maybe you could talk about that a little bit. I think there's some changes that not everyone's involved in SPAC or de-SPACing, but maybe you could tell us what you're going through.
So SPACs are a special purpose acquisition company, is what SPAC stands for. And just a very high level, a SPAC is a company that is formed, and it does an IPO and lists on an exchange. It has no operations, so it is a shell company. And it typically gives itself 24 months to go out and find a target company to conduct a business combination with. So a merger, reverse merger with, and it could be a private company or could be a public company. There's been some very creative things that SPACs have done, and I think it'll continue to be creative. So the SPAC is formed. It goes public. There's no operations. Let's say it raises $200 million in its IPO. It puts that $200 million into a trust account and pretty much invests that at treasuries or similar. And then it goes out and starts to look for a target company. It looks for a company that is either a very well-developed name that is profitable and has been in business for quite a while, but is just looking for an opportunity to become public and to maybe raise capital at the same time. Or some of these SPACs have looked for more startup companies, more companies that would be a little more traditional to kind of a private equity, even a VC type environment. So they may be pre-revenue, but and that's what we saw a lot in late 2020, early 2021. Was the electric vehicle, I think, was the most popular by far. There's a lot of popular areas, but that's one that had a whole lot of attention and a lot of deals got done. So what you do is you have that SPAC, and then they identify that target company, and then they move towards a business combination and making the company public. Along the way, the SPAC investors have the opportunity they have basically a put option on the shares that they invested in at the launch of the SPAC IPO. The tradition is $10 a share, so if you have a $200 million SPAC, you have 20 million shares. The SPAC founders will dilute that somewhat to take a 20% stake in those shares. So you have a little bit of dilution from that, but there will also be some warrants that get issued, both public and private warrants. So to entice investors to invest in this SPAC that has no operations and is just a lot of times indicated an area of interest that they want to go after, maybe a technology company, a fintech, or an ESG type company, technology, energy, EVs, different focus. So to entice investors, they also will typically issue warrants, and those warrants are part of a unit that you get when you invest initially into that SPAC. And then there's a lot more to it, but just 52 days after those units are made public and trading, traders will have the option to bifurcate the share from the warrants, and then the warrants will start trading separately from the shares. And so you can have a SPAC that has units, which include a share and a warrant, and then also has publicly trading shares and then publicly trading warrants. And so I think one of the reasons these SPACs have been so successful in raising large amounts of capital is because of this, put option that you have as an investor. So if you come in and buy units for $10, at IPO of the SPAC, you can then bifurcate, and that share you can always put back for $10. At the same time, can retain your warrant that you have. So, and warrants they're all a little bit different, but initially in the early days they were, let's say, a 1/2 warrant, or in a 5-year duration to exercise that. But now there's 1/3, there's 1/9, there's half. There are different structures on the warrants, and even some of them that aren't doing the warrants, they're just doing the shares. But so it you have different perspectives on SPACs. You have kind of the entrepreneur who maybe has a business that is pre-revenue, and this may give them an opportunity to become public, and become public much faster than a traditional IPO. So in the past, you have your traditional IPO, you have direct listing as an option to go public, and now SPACs have taken over. So last year there were 1,058 companies that went public last year, and over half of them went public via a SPAC transaction.
Let's shift to technology and security. Some of the things I wanted to touch on were platform as a service, cybersecurity, blockchains, 5G. FX asset clearing, CME activities. Maybe we'll begin with platform as a service. This idea of there's these containers and microservices that are easy to develop. How big of a deal do you see this being in 2022 and beyond? Is this moderate, significant, very significant? I'm not going to say minor because we wouldn't be talking about it if either of us thought it was minor. Any comments on that? Or
it's going to be major, definitely not minor. Software. You have some of the futuristic thinkers that software will go away, right? We'll have the next generation. I don't think that's 2022, but I think that's, we're just at the dawn of those in cybernetics, closed loop systems, with no human intervention. You have the system doing the observation, the orientation, decision, and action without a human in that. So it's kind of the next gen of information systems. But I think that's going to be, I think we're at the front end of that. So I think that's not a 2022, but probably a 2, 3, 5 year before we see that start to fully. But, as it relates to software as a service, infrastructure as a service, platform as a service, I was kind of interested, from our discussion last week is kind of what your thoughts are actually on that.
I guess there's a couple things, and I did enjoy our conversation last week too, as we prepped for it. But the idea of there is one direction where technology is heading, and it heads to smaller and faster. So these smaller containers where these microservices are, this idea of microservices or smaller component parts, smaller Lego blocks are put together. What does that mean? It means faster development. Instead of every year and a half there's an update, it became every 3 months, twice a year, every 3 months. Now there's oftentimes monthly rollouts in traditional SaaS systems. Well, in some of the most modern architecture, you're seeing people roll out updates every week. Sometimes they're being rolled out live. You don't even have to bring the system down because the components can be isolated, they can be dropped in. And so this area, just in terms of outlook for 2022, I see how much will happen in 2022. It may be hard to see and say what's going to happen within this year, but everything's moving towards faster and smaller. This quicker scale. So it is a massive deal because it's this whole trend that we've seen for over a decade, but just using different types of tech. But with that, Todd, cybersecurity, as we look at the threat has continued to increase. The criminals are far more automated. They're leveraging tech. Maybe we can talk about that a little bit too. I know we spoke about how do we put patches in more quickly than the past. Well, things like platform as a service and microservices enables us to roll these out more quickly. I know we had a discussion about fraud, and we use a service called BitSight, and I didn't know if you had any comments on that, or maybe you have questions for me on that too. I know we spent some time talking about cybersecurity and how important it is.
BitSight, definitely very interesting. My prediction, my thought actually on this area is that just how we're seeing ESG be more and more a part of the corporation's disclosure, and investors want to know. And they want to metric it. They want quantitative and qualitative both. And so I think in the future, as part of sustainability reporting, cybersecurity has definitely been a part of that in the past, but I think it'll become more and more a part of that. And BitSight, I think, is one of those leading technologies in that space that will help corporations to really start to metric what they're doing, what they have in place, what their plans are for sustainability as it relates to cybersecurity. And ransomware attacks, right? They, I think last year was the largest by far for these type of attacks, and they're very dangerous. It's kind of, actually, when you think of COVID, right, and the COVID pandemic and viruses and how we fight viruses and what we use and what we do, and I think cybersecurity has some similarities. So there might be some learnings that we have from COVID that we can take into the cybersecurity space to help be, stronger and more resilient as it to relate to these areas of vulnerability. But I thought it was interesting what you shared with me last week on BitSight. Did I understand correctly that you have some experience with BitSight and using their technology?
Yeah, so in terms of, we do a lot of work with insurance companies, banks, and they require an ever-increasing amount of validation of what goes on. And so a number of years ago, we started doing monthly vulnerability scans. That was, these organizations were asking, do you do annual vulnerability scans? Well, we just started running them monthly. It just showed so many items and issues, right? And you'd have to fix them. And so it gave us this monthly cadence. And initially there was a ton of things to fix. I mean, both false positives, you have a presentation with a credit card number in the presentation and it thinks it's a real problem. And so you have to go through and solve all these issues. But once you work through that, it becomes extremely manageable because it's doing a complete end-to-end check for vulnerabilities you have with your system, whether it's patches or data across the board. So it's an inward look. And so we just started doing that. But the requirement to do a penetration test where you pay an outside organization to come and try to compromise a system, to land somewhere and then move laterally, whether it's coming through HR, an open printer, whatever, they're trying to compromise your system or your people. And so that's something you do, and it may run from 2 weeks to 6 months, depending on what you're doing, where there's a real world external test to see how things are going. So those have become standard. But BitSight is this ongoing monitoring tool that checks everything from the tools that you're using. So if there's some kind of vulnerability shown, it identifies those. It tracks everything from your website to your patching process to the assets that you have, and it gives you this dashboard. Everything's scaled and ranked, and you have a score. And like you said, there's some ESG scores, while this technology and cybersecurity scores are becoming more common because everyone's wanting their partners to be secured. And so we look at these things and say it's essential to have them because you've got a friendly, if you will, continually probing everything you have, identified items, and it gives you a workflow for assigning who's going to fix whatever issue. Your SPF record isn't completely up to date. You've got a header problem. You've got other items that have various levels of severity from very, very minor to something that would be considered significant. And then it allows you to just continually tighten up your infrastructure, your hardware. And so that combined with the people process is neat. We'll put a link down there in the chat box about BitSight. They just were, huge investment was made into them by a NRSRO just recently to support some of their evaluation activities. So we see this as becoming much more, that will become more common. Will that happen in 2022? Maybe 2023. I think within those 2 years, we'll see people asking for scores like this that are more robust than some of the other scores that are out there for security.
One of the other things, ransomware. I think I mentioned in the past I was asked to write an article on Bitcoin on the corporate balance sheet, which I haven't done yet. But back in 2018, I did a presentation co-presented with Bloomberg at AFP on Bitcoin, and so my point was I dove into it to completely understand all the mechanics of Bitcoin and how it works, why it works, from private keys to public keys to encryption, really understand the mechanics of Bitcoin from a very deep perspective. But then as it relates to ransomware, I had one of the banks mention, well, maybe you should have some Bitcoin on the balance sheet in case there's some sort of cyber attack and you need that. And so to learn more on that, I don't know if you know Fong Li. He's MicroStrategy CFO and president. And so I have a discussion with him next week, a call with him next week, to just for me to learn more. As you know, they have extremely large position in Bitcoin and have even leveraged the business somewhat to invest more. So I'm pretty excited about that conversation with him to learn more about that side of it. So I've got the mechanics down, but the use cases, as it relates to money, a medium of exchange or a unit of account or a store of value. And those are the three kind of core things that define money. And so better understand what his thoughts are on.
So from Bitcoin to blockchain and blockchains, CBDC, central bank digital currency, anything you've observed or you'd predict for 2022?
Yeah. I probably wouldn't have said there'll be CBDCs launched. I wrote an article. I was part of an article. I contributed to an article. I think it was March or April on central bank digital currencies. And at that point, I would have said it's probably a good 3 years away. But now, at last check, there were 56 different central banks that had programs exploring in depth, not just talking about it, but actual programs in place. And everything from Bitcoin for the UK, the ECB, China, Canada, Switzerland, Indonesia, India, Japan, Israel. So a lot of large, very sophisticated countries that have that are working on this. And then over the weekend, Mexico came out. I don't know if you saw that. 2024, they plan to launch a central bank digital currency. To my understanding, there's only two that have actually launched something, and Guadalajara has the Hoozie, Hoozie, the Hoozie that they have pegged to the Mexican peso 1-to-1. And so I think that is a very small test. There's some social aspects to earning Hoozie, so that's really interesting. And then Nigeria, my understanding is Nigeria has launched something. So I guess all that said, I think we'll see a lot more in 2022, and we could be surprised if we talk again in January 2023. We may want to update that, so we'll bookmark that.
As I look at some of the things like blockchain and some of the other maybe less common ones like Litecoin and Doge, and then I see what the central bank digital currency can offer, I tend to be more favorable towards those where there is a, I'll say built-in tracking mechanism. Some of the ones that might be more virtual that are great for paying for ransomware. We continue to see this growth of tracking and reporting requirements from different governments, taxing authorities, how they're treated. I'm still pretty open on all of them, but maybe more conceptually favorable to the CBDCs that are in process.
Yeah, it'll be interesting to see exactly what the use cases are and how they change things. I know some of economists that I talk to on occasion, they say that we've had digital currencies since the euro dollar system kind of was born back in the late 50s, 60s, with U.S. dollars offshore, right, and lending offshore, kind of that euro dollar system, and with U.S. dollars as the hegemony and the world reserve currency. We had digital currencies then, and how does the CBDC really change what we have? And I think my response to them is just the efficiency of some of these platforms to make transactions much faster, and with a digital settlement actually between different currencies.
I mean, it almost sounded like you were talking about the use of blockchain for things like smart contracts where there's activity, certain tasks are completed, and then settlement comes out from that. I think there's a significant amount of value in some of those use cases. if that's what you were talking about.
Yeah, absolutely. That, and I think when we talked last week, you mentioned Cobalt and Definity and their partnership, and we talked a little bit about FX asset clearing. So I think that's definitely going to be an area of growth and some good developments and partnerships, not just for FX, but for all sorts of digital assets and contracts. Just kind of like with these NFTs, which non-fungible tokens, I kind of think of them when we were kids, Craig, and we had baseball card collections. Then some of those had quite a bit of value, right, at some point. Not as much as probably we thought back then that they would have in 2022, but these contracts where it's written into the blockchain that let's just say it's a piece of artwork that's an NFT that every time it's sold, the artist can get a percentage of the sale price every time it's sold. So, and that's written into the contract. That's a really interesting, very, very, very cool. And then I also like the tokenization of real estate. So real estate obviously is a huge business, and there's a lot of great products, but I've heard some discussions on tokenizing, and we've talked in the past about tokenizing large infrastructure projects, but just from a real estate perspective, if there's a new building that's put up, let's say $100 million building, and investors want to not just own a piece of a REIT or an ETF or an index, but they want to actually own a piece of a particular asset to be able to tokenize that. And so you're seeing that in a lot of different areas, creative areas. I like rare whiskeys, and there's some work being done there on investing in actual barrels of whiskey. And so yeah, I think there's going to be a lot of really cool stuff that comes from the blockchains, and not just talk of cryptocurrencies, which I don't think we really have a cryptocurrency period at this point. We have crypto assets, I think, so more of a store of value, and people have to decide how good of a store of value they think it is. But just the latency with when it comes to the three functions of money, a medium of exchange, I don't think the crypto would fall into the a quick, fast way of conducting transactions. So I think there's work to do there. But I think blockchain there's a whole lot of really interesting ideas and ecosystems that are being built out with it. So
I'm most interested in your comments about the rare whiskey. You can invest in it without having a giant cellar and rolling these barrels in. That's an interesting way to broaden it up. It's like the money market funding or the mutual fund equivalent for some of these other assets. Todd, just in terms of time, we've been having a great conversation. I'm going to leave off the staffing part. I know there's a lot we wanted to talk about there, but maybe you could finish up with any final thoughts. I know you talked about the Chicago Mercantile Exchange, a record on open interest contracts. Maybe you could finish with that, and any final thoughts for the outlook on 2022.
What I was talking about last week was they reached a record level of open interest in FX on the CME, and it's an area that I'm interested in and looking more into it. But many of us have a PhD in Dodd-Frank, and that we got back in 2012, 2013. As it relates to uncleared margin rules and standardizing the approach to counterparty risk and measuring counterparty risk, I think that's what's driving this. And so I think it's definitely an interesting area, and something that I'm this year going to be diving into a little deeper to understand how that might impact FX as a whole and the OTC markets as well. So for future predictions, I didn't know if we wanted to have fun and both make a prediction on the price of Bitcoin or something for the end of 2022, maybe bet a bottle of whiskey. But the other things I had were 5G and how that's coming. I think 2022 is going to be a big year for 5G. Bigger than 2021, and there'll be a lot more discussions about Web 3.0 and how more real time with 5G can help enable a lot of the benefits that are going to come from Web 3.0, more real time and 3D portals and avatar representations and just games, businesses, and virtual worlds. And so, of course, I think a buzzword for 2022 is going to be metaverse and omniverse and multiverse, whichever you want to call it. But just these virtual worlds, and I think it's a very interesting space. I think a lot of complacent treasurers, non-futurist, non-innovator type personalities may get left behind on this. I was lucky enough to be invited to a conference of treasurers, 60 treasurers in the Americas, and we did the conference on a virtual platform, and we were avatars. And I'm not a gamer, but I found it extremely interesting and interactive. And so from a human perspective, I think there's definitely some interesting. Now, there were no holograms or anything like that, showing up in my office here at home, but it was definitely interesting and a lot of fun.
Todd, thank you so much for your time today. Looking back at 2021 a bit, and also out to 2022. Thanks for your time.
You've reached the end of another episode of the Treasury Update podcast. Be sure to follow Strategic Treasurer on LinkedIn. Just search for Strategic Treasurer. This podcast is provided for informational purposes only, and statements made by Strategic Treasurer LLC on this podcast are not intended as legal, business, consulting, or tax advice. For more information, visit and bookmark strategictreasurer.com.